Welcome to Global Money Talk, brought to you by SamproTV. Greetings to all of our viewers from across the United States, Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me today for our market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Happy Friday, Tai.
Oh, good morning.
Good morning.
Another beautiful fall day here. Today is Nevada Day, to celebrate the admission of Nevada, the 36th state to enter the Union. Also, Pablo Picasso's birthday, into his museums and some pretty remarkable work. And finally, in a very timely way, it's Yankee slugger Juan Soto's birthday. The man turns 26. He's going to be playing in the World Series tonight for the Yankees. And as a 26-year-old after the season, I think he's going to get a $600 million contract.
That is quite the sum, isn't it?
That's amazing. I mean, probably the second highest contract in baseball after Shohei Ohtani's amazing $700 million. But Ohtani also pitches, so we've never seen a guy like him. But it's great to be 26 and looking at $600 million.
Yeah, and speaking of which, will you be watching the game today?
Oh, absolutely. And I think watching every game. I'm a long, diehard Yankees fan.
Yeah, we'll be keeping an eye on that game that starts around 8 p.m. this evening.
Right.
But before we get to that, let's start out with a look at the market.
Yes.
So this morning we're seeing green across the board for the major U.S. stock averages, and this does come after the volatility we saw this week. On this Friday morning, we're seeing the Dow up by triple digits, up by nearly 0.3% on the session, while the Nasdaq is extending gains today, up by over 1%. Or currently up by 250 points. And we'll talk about Tesla, but we saw that surge in Tesla shares in the previous session helping to boost the NASDAQ. And finally, let's look at the S&P 500, which is higher on the session, up by about 0.8%. So we got a slew of economic data this morning, but I know that ahead of next Friday's jobs report, we should take a step back and look at jobless claims that came out yesterday.
The claims number, I think, surprised a lot of folks. We didn't get a chance to talk about it yesterday, but 227,000 versus 242,000 expected. It seems that sort of hurricane bump didn't last very long. It really lasted functionally a week, maybe a week and a half if you count the week right after that, and now we're sort of back to normal. I think that makes the market sort of a little bit happier. And also, this morning, the durable goods came in more or less on expectations. It's a very cyclical report, and we're just in kind of a quiet period right now. But just before the show was started, we had Michigan. Yep. And the Michigan report was really kind of a Goldilocks report. Inflation expectations were lower, but confidence was higher. So suggesting that perhaps the market is feeling better about the Fed starting to cut rates and the rates will be coming lower. And I think that sort of that's a report that makes the Fed happy, and hopefully continuing their measured cuts. I think the 95% of people have a 25 basis point cut baked in at the November meeting, and that is making the market happier. And the S&P looks like it may close strongly today and kind of dispel the gloom that we had sort of in the middle of the week.
Yeah, and I'm glad you mentioned that, because this week we were seeing red across the board. We saw a mixed close, many sessions this week, but here we are on Friday, and depending on how high we close, we may possibly see a higher close for the week. But as we head into next week, we have to keep in mind that it is month end. Hard to believe only 4 full trading sessions left until the beginning of the new month. And given all the volatility we've seen, there's a lot to look forward to.
There's big tech earnings reports next week. You mentioned Tesla.
Yes.
Tesla really beat everywhere. And I mean, Tesla still has issues in terms of slowing EV buying in the U.S. And other places as well. But they beat everywhere, and I think there are a lot of Elon haters out there. There have always been. Many of them have been carried out, but now I think there are even more, because there are a lot of folks who actually probably the segment that likes EVs probably can't stand Elon's politics right now. So you're getting a lot of shorts, and I think a lot of shorts are getting carried out. mean, up 20% yesterday. I think you mentioned they were up 3.5% again today. If you're short and you're leveraged, that's incredibly painful. And that's what this price action suggests to me, that there are some shorts who really just caught on their back foot. They probably were pretty happy after the Tesla drop, after the robo-taxi thing sort of fizzled and it wasn't up to expectations. But this is a very painful reminder that sometimes it can be really tough shorting Elon Musk.
Yeah, and in New York morning trade right now, we are seeing Tesla shares maintain gains up by just 0.7%. But as you mentioned earlier at the open, Tesla shares were higher, up by over 3% on the session. And as you mentioned, it came on the heels of the rally we saw yesterday. So that is significant. But we do have other tech earnings coming out next week. So what are you excited about ahead of those earnings?
I think those earnings are. The expectations are reasonable. I don't think they're sort of extreme. So not expecting a huge surprise. I think if we do get a surprise, one way or the other, it could substantially move the markets. I think markets are probably paring. I think a lot of investors are paring back their risk ahead of a jobs report, ahead of the election, and ahead of the Fed. So probably more susceptible to any surprises one way or the other. With tech, I think maybe a little more susceptible to a downside surprise than really an upside one. But I think the risk is getting pared back a little bit, even though the S&P is having a pretty good day.
And I think another name we should focus on today is Boeing. So we are seeing shares of Boeing up by about 0.5%, but we weren't able to get too much into Boeing this week.
Right.
So what do you think is going to happen with that company?
So that's the machinist Wednesday night late rejected the latest proposal, which is 4 years and 35%, which is functionally what they asked for, by a 64 to 36%. So basically 2/3. And at this stage, I think they want their pension plan back. So their pension plan in 2014, if you had it, you got to keep it, but they would no longer add to it. And they wanted that back. And I think this is one place where they're not going to get it. And the reason is that this became very popular sort of in the middle of the 20th century when car makers like GM and other companies wanted to keep workers, and they gave them tremendous defined benefit pension plans, which means you get a pension after you retire for the rest of your life, which could be a really long time. And it's great when times are really good, but as GM found out, as we went into the 80s, 90s, and 2000s, it's like having a $100,000 house with a $500,000 mortgage on it. In fact, it was so bad that no one would buy GM. When GM was forced to file for bankruptcy in 2009, right after the pandemic, their unfunded pension liability was $14 billion. Right now, Boeing's unfunded liability on that is believed to be somewhere in the neighborhood between $5 and $6 billion. Now, Boeing's a different business than GM. They have a much bigger moat. Really it's them and Airbus for now. But there's no way that I can see the CEO or the board of Boeing saying, we're going to bring that back. We'll give you other things. We'll increase 401k contributions, which are great. But once we've given it to you, that's it. We have no more responsibility. You just don't want to carry something like that deep into the future. So I think they want it, they won't, but they won't. The strikers won't get it. And I think it's who blinks first, right? The strikers were heading into the holiday season in the state of Washington and in most states. You don't get paid unemployment benefits when you're on strike, and that's going to start to hurt. Boeing is hurting too, but I can't see the CEO backing down on that. I mean, at some stage he may go 440. Here's what you wanted. Are you still going to strike? But I think now it remains to be seen where who gives. But the defined pension plan, workers love it, but I can't see it coming back.
Okay, well, as we head into the weekend, this does mark week 6 for the strike, and that is considerable, as you mentioned, not just for the workers, but also for the organization. And we've also talked about the suppliers as well and how it affects them. So overall, there are concerns about a potential credit downgrade, and that could have implications on Boeing as well.
Absolutely, absolutely.
Yes, and now I do want to move on to other stories that we're watching today. Since we're looking at companies, let's talk about what we're seeing in commodities, but also Newmont shares. So in New York Morning Trade, shares of the company are lower today, but tell us what's going on here, and do you think this is an overreaction?
Well, let's look at graphic two, because I saw this chart and I just wanted you all to be as, sort of surprised as I was. Graphic two. This is yesterday's chart, the close. So Newmont came out and sort of missed on earnings a bit. I think their revenue wasn't where the market wanted it to be, and it had enjoyed a huge rally through the course of this year. Look at that red bar. I mean, that red candle. I've got a scientific term for it, and it's like yee. You get that, and you're like, wow, that's really painful. That's the market being quite long, and you're seeing stop losses cascade. I think they opened lower again today, but they're a little bit flat. So one of the things that I think the market really was distressed about was their all-in sustaining costs, which is what it basically needs to keep mining and get an ounce out of the ground. It went up 13% year on year for the third quarter, from $14.26 to $16.11. And this is one issue that it always worries me about the miners. Mining is a really tough business. I mean, you have to build a mine, permit it, it takes you the better part of 10 years to get it going, and then from time to time you have to do maintenance. You might get accidents. We just saw that Vale, we have the board right here, Vale was halted for trading because their earnings were out, and they missed tremendously because of damages associated with a tailings dam, I think, that broke. So it is really hard to run a mining business. So sometimes I really think that it is simpler to buy the commodity and not really deal with the mines. Now that said, the mines have done great this year on gold, because gold has gone up so much, and looks like it'll continue to go up. So I do think, even though we looked at that and it was really kind of an ugly candle, you might be able to buy this one on dips, but it hurt the other miners as well, because people were worried, is this a signal of, what else is to come? Because the royal people, when gold rallies like this, the countries will demand more royalties, and the workers will demand more pay, and your mine is in their country. You basically have to play ball, so your costs can go up very, very quickly in mines, and so Newmont showed us that yesterday.
And I'm glad you brought up the point of gold, because when we're looking at gold prices right now, we see record highs for the front month contract. When we're looking at the COMEX contract as well for gold, it is above 2,700, and that is something that we've highlighted when we're talking about central bank holdings of gold as well. But in terms of implications for the miners, is there any, and what does it mean?
So I think this looks like it's going to be a one-time problem for Newmont. I mean, you certainly don't want to get into issues where you have recurring, non-recurring problems. Right? This should be a non-recurring problem. They think their all-in sustaining costs will go down the next quarter, go back down to something more reasonable, like $14.75, which the market is okay with. But the costs never go down; they only go up. The price eventually will consolidate and may correct. It's a great year so far for the miners, for the mining ETF, as it should be, a gold year like this. Gold looks like it'll continue. Silver is stalled out a little bit. On the Heiken Ashi charts that I like for silver, looks like it's stalling. So I think that's worth a speculative buy, but maybe a little bit lower. And the problem with silver is it can really do very well, but you could turn around and lose 10% in 2 or 3 days, which is, for many investors, I always say, if you want to invest in gold. If you want to play and speculate and go to this casino, that's silver. The other thing we should mention is palladium, which is generally in that complex. It's part of the PGMs, and the other day, the Biden administration went and recommended that perhaps the G7 should clamp down on Russian exports of palladium and titanium as a response to the war in Ukraine, that sort of tightened the screws a little bit. Palladium, 40% of the supply comes from Russia, and that went up 9% yesterday. It's up again today. And just like Tesla, I think this is a case where the shorts have been caught very, very badly. Speculators have been short palladium for a long time, have done very well. As a matter of fact, that December last year, Palladium rallied tremendously on on some technical issues with the contract and deliverability, went up $200 almost in a straight line, and the speculators pressured it back down. So you might be seeing a little bit of that right now. Now again, this is just a recommendation. It's not that it's going to be policy anytime soon. But nevertheless, if you're caught short, Palladium is a very illiquid market on a good day.
Yeah.
So that's why you're seeing the market, the sellers, I think, well, we're not sure what's happening. We're not going to sell anymore here. We want to wait for things to calm down. So I think we're seeing actually a lot of catalytic converter business coming to the palladium market over the last couple of days, simply because palladium has gone up so much, and those dollars matter to folks who recycle those converters.
Mm-hmm. And I think we're seeing interesting price action when it comes to the precious metals. So you highlighted gold as well as silver, palladium. We'll keep an eye on what happens moving forward with all of these precious metals. But in terms of what we're seeing, why does gold continue to hit these record highs despite everything that's happening?
So I think the biggest reason is it's been driven, the sentiment has been driven by central bank buying. And it's a central bank buying mostly from sort of, I guess, third world central banks that are concerned that with how the West froze $300 billion of Russia's money, in retaliation for their invasion of Ukraine. It's, it is the reserve currency. We need to be in it. But if we can move, dollars, quote unquote, elsewhere into something like gold, that's worthwhile. And they finally defeated folks. So there are a lot of anti-gold bugs who've been pressuring gold over the years and have done pretty well, but they've really cleaned those out. If you're a gold short, you've been carried out, cremated, and your ashes, buried or scattered somewhere. So there are really no gold bears right now, which is generally, you worry about that as an investor, but the price action, doesn't lie. There's just the supply is coming from the miners, and the miners aren't even hedging. The miners haven't hedged really in any substantial way since I think 2200. I understand some of them are looking for 3,000 to hedge. I think that would be a wise thing to do. You want to be able to lock in 3,000 plus the forward, whatever the forward is, out 2 or 3 years, because you don't know what will happen. No one knows what will happen in 2 or 3 years. So I think around 3,000 or maybe ahead of 3,000 we may stall out a little bit. But it's a bull market, and like I said, I'm long, but I wish I were longer.
Yeah. Well, of course, we only have about 7 minutes left for our market segment. So I do want to talk about the upcoming election because the countdown is on. And we're keeping a close eye on polls. All the polls, or depending on who you are, you might be watching certain polls across the nation, whether we're talking about certain demographics or certain states, battleground states. But tell me what you're seeing right now.
So let's take a look at graphic 3, because I think at the end of the week, and we'll do this again at the end of next week, right ahead of the election. So the best way to look at the polls, because there are so many and they differ in quality, and unless you're Nate Silver or 538, it's hard to really discuss each specific poll. So the Real Clear Politics gives an average of the polls on a running basis. So if we look at the upper right-hand corner with the red and the green, it looks like Trump has increased his lead in 5 of the 7 swing states over the last week, while he's lost a little bit of his lead, but he's still leading in North Carolina and Michigan. So he continues, according to the average of polls, hold leads in all of the swing states. And if we look at, if history is any guide, that is going to make him more likely to make it to be the next president of the United States. So one thing that I did, all this is in Real Clear Politics, but one thing I did do, and if I have time, I'll get into it a little bit right after this, but on the right-hand side, that little box with Trump wins, Senate GOP, House GOP, is something that looking at all the different polls and the status of the races, I'm giving Trump a 55% chance to win. Now, I might be a little low on that, but the reason I've done that is the Democrats' ground game has always been tremendous. They have hundreds of people out in Pennsylvania. As a matter of fact, I think 100 people flew over from the UK, from the Labour Party, to help out Harris in the swing states, which I think is a little bit risky, because if the other guy gets in, he's going to not be happy with it, right? You just hope he forgets about it. But I give him a 55% chance because the ground game is still, the Republican ground game has always been trashed, and it's not good this year. Then the Democratic ground game is great. So I'm giving him a 55% chance. The Senate GOP, people are pretty sure that the Republicans will retake it because West Virginia, Manchin retired, so that's going to the GOP. And it looks like Montana will go the GOP's way as well. But there are a couple of races that are a little close for comfort. In Texas, in red Texas, Ted Cruz is holding on to a 3 or 4% lead. Could they flip Ted? Maybe, probably not, but possible. And then in Nebraska, quietly, this independent named Dan Osborne has crept close to Deb Fischer, who's the sitting senator. So if the Democrats can flip either of those seats, or if Tester somehow hangs on and Harris wins, they will have a 50-50 split and hold the Senate. The House, there's too many races, too hard to know. I think their first-term House incumbents in California and New York, they're particularly vulnerable, so I give the Democrats a very small edge. So at the bottom, people have been talking about what will happen if there's a sweep, if there's a red sweep. So if you actually just simply take the numbers, the theoretical, if you multiply 55, 75, and 45%, your theoretical value of a red sweep is about 18%. But really, it's higher than that. You give it 30 because they're not independent races. They auto-correlate. So if Trump wins, he's going to probably have pretty big coattails. For example, if Trump wins, it's hard to see Ted Cruz losing because how many people in Texas are going to vote for Trump and then vote for the Democrat in the Senate? That seems pretty unlikely. Similarly, if Trump wins, then he probably has coattails that helps the House races. On the other hand, if the polls are wrong like they were in 2022, with the red wave that became barely a red ripple, you'll have Harris dragging, potentially bringing the Senate with her and almost certainly bringing the House with her. That's why, even though in theory the chances of a blue sweep is about 7%, I'm actually giving it a 25% chance. Probably a little high, but again, these things auto-correlate, which is pretty important.
Yeah, I think it's very important that you mentioned the correlation and the auto-correlation as well. And we know that both candidates, as we edge closer to Election Day, they're both making the last-minute pushes, and apparently Trump is scheduled to tape an appearance on the Joe Rogan Experience in Austin, Texas. And I believe that it's possible that Kamala Harris might not be able to make it in time given her conflicting schedule, but a lot is happening here. So what's really interesting, so I think it came out that Kamala will not be on the Joe Rogan podcast, and Trump will be. And I think Rogan is kind of a maverick, and he has, and I think people who listen to him are probably more Trump supporters than Harris supporters, and he has really long podcasts. Yes.
They're like 3 hours long. So I don't know how long President Trump is going to be on it, and he's probably preaching to the choir. But I think there is some risk there that I wouldn't. I guess the word is denigrate or too much, because if you let Trump speak for 3 hours, the likelihood that he says something dumb is really extraordinarily high, probably asymptotically close to 1. So I don't know if this is actually a good move. If you're doing well, you're riding a wave, I know he'll talk to anybody who wants to talk to him, but I think there is some level of risk here.
That'll be interesting. So perhaps next week we will be talking about what we heard from that experience, and I think this is something that supporters of both parties may indeed tune in to listen to.
Yeah. One thing I would add, actually, that came out relatively late, but we have a little time, is it came out that the standing committee of the Politburo of China, and those are the 7 guys led by Xi who really matter. They make all the decisions. They called a meeting from November 4th and November 8th. And I'm saying they're probably just getting together to settle their bets on the election. But in truth, I think they're going to see the results of the election and decide what they want to do if they need to actually bring out that bazooka of fiscal stimulus, because Trump in the White House is going to make life fairly difficult, more difficult than China than it has been.
I'm sure the scheduling of that gathering is deliberate and not a coincidence.
I think you're absolutely right.
We will see what happens as we head into the month of November. But Tai, as always, thank you so much for joining me here at the New York Stock Exchange, and have a great weekend. And coming up next, I will be joined by Dan Ha, partner at Karani Asset Management. We'll be right back. Don't go away.